Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy New Year. We are back with another episode of the Tech Behind FinTech. This is the first show of the new year. I am happy to be back, and I'm joined by a returning guest, the esteemed Chiagozie Iwu. How are you doing, man?
Yeah, I'm great. I'm doing great, right? And it's cool to be your first show of the year, by the way, right? And yeah, I see a hopeful 2024 for all of us, right? And generally, of course, the fintech world is improving day by day, right? And yeah, it's going to be a great year, and I'm doing great.
That's wonderful. I'm going to go into your bio. Even though you are one of our most frequent guests, it's been a while since you've come on, so new viewers may not know who you are. But I'm going to read your bio. By the way, today's title of the show, we're talking about fintech trends for 2024. So it's going to be an exciting show. Let me just do some housekeeping before I jump into your bio. We are streaming live from Facebook, LinkedIn, YouTube, Twitch. We have a Instagram feed from our Tech Behind FinTech Instagram page. They have a new connection right now with the platform we use, so that's going live. Plus, I have a live going on for my personal stream. Without further ado, let me jump into your bio. Chiagozie Iwu is the former CEO of CI Cryptosolutions, a company renowned for its ownership and operation of the NigerCrypto.com exchange and NigerPay.io payment gateway, along with its expertise in developing blockchain solutions and consulting for various firms. With a wealth of experience, Chiagozie has transitioned from his role as CEO to a prominent consulting position. Currently, he is engaged in a consulting for startups, notably contributing his expertise to Altiminst, a promising venture in its foundation stage. In his consultancy role, Chiagozie is actively involved in shaping Altiminst's product development, refining business strategy, and implementing financial engineering solutions. As a seasoned blockchain enthusiast, Chiagozie's vast experience includes formulating derivative contracts and portfolio structuring in both cryptocurrency and traditional markets. Notably, he has pioneered the creation of the BAR WI30 cryptocurrency index, tailoring it to align with the distinctive characteristics and risk of the cryptocurrency market. Certified as a blockchain and finance expert, Chiagozie maintains a core focus on the financial applications of blockchain technology. Speaking of blockchain, I know we're going to get into it for a trend, man. Seems like things are going up again, right? Let me ask you a question before we jump into trends.
Yeah.
Are we out of a crypto winter right now?
So you know, I'm going to be consistent with this, right? I wouldn't say we're out of a crypto winter per se, right? But I don't look at the success of the pricing in whether we're having a bull or bear run at this period, right? Because whether we're in a bear market or in a bull market, if you compare the pricing to where we were 10 years ago, 5 years ago, right? Crypto is still 200% higher than the S&P 500, right? Which is way more than that, over almost 1,000% higher than the S&P 500 in terms of 10-year growth, right? So wherever we are, I wouldn't say we're in the out of crypto winter. It's still gonna be, of course, the market is being driven by a lot of FUD, right? The expected ETF approvals and all that is kind of driving the market, which is not a strong enough fundamental reason to actually have a higher price. And let's say Bitcoin, what is an ETF? You're just taking what you already have and structuring it in an exchange traded fund. It doesn't mean that BlackRock is going to buy more Bitcoin. No, right? Even if they're going to do, if they're going to buy more Bitcoin in that sense, it's not in the way people think it's going to be. So it's more or less like a sentimental value rise with an expected ETF than actual having a fundamental. The only fundamental aspect that is happening sometime later this year that should actually have some effect theoretically in price as the mining. The halving event, right, which happens every 4 years, right? So the halving event should theoretically increase Bitcoin price because the difficulty of mining increases, right? And for the ecosystem to remain sustainable, right, the earnings from mining has to be higher, right? But meaning that the price has to increase, right? If not, it doesn't make sense. The miners do not stay in business, right? A lot of the stuff that is being used for mining has reduced a lot in the last, let's say, 2 to 3 years, right? A lot of new miners entered the market. A lot of stuff was closed in China in the last 3 years. A lot of new miners in the States, in Japan, and a lot of countries, even here in the UK, entered the market, right? So already the cost of mining is already very low compared to how it was 5 years ago when an ASCII and GPUs were very, very expensive. So would the halving make mining unprofitable at current price? It wouldn't. So still very little incentive for price to rise, but a sentimental price increase is going to have to happen at that point. So yeah, I'm not bothered about whether Bitcoin gets to 100K, right, or whether Ethereum gets to 20K, right? I'm more bothered about how the blockchain is being utilized across board in financial technology to have results. How is Bitcoin more adopted? Because when sentimental value, when is more of like sentiment, when the retail market is pushing the market more, we have more or less a situation where there is more focus on price achievement and actual dependencies and actual utility and all that. So that's why I try to be careful when I'm talking about, hey, this is what the price of, because Bitcoin, in terms of price, and Bitcoin has already achieved a lot, right? When it gets to 100K or 200K, it shouldn't be the case at this point, right? Because it has actually achieved a lot, right? So yeah, there is a bull market coming, right? But I don't think it's gonna last as long as other bull markets have been. So yeah.
That's a good point. So in line with today's show, with the forecasting for 2024, let's get into that. Let's get into adoption. Let's get into, what do you see around, I don't know, DeFi and things like that. So let's cover, we're going to do different aspects of fintech, but because of your background, and previous episodes where you just gave us a lot of knowledge in terms of the blockchain world, I would like to explore that in terms of what do you see for a trend for 2024.
Yeah, even the AI part, right? When I saw the topic that applications of AI and blockchain synergies, right? I got more interested because it's something that even with Altiminst and a few other companies, let's say one of the companies, two companies, is something we're currently working on heavily, right, in that particular aspect. So yeah, it's something that is really interesting to me, and of course, the blockchain applications. Sincerely, fintech is taking a very positive movement in the trend of 24 and coming years. Yeah.
So what are you seeing? Are you seeing like more of a synergy with, I know AI and fintech for a trend, obviously, every single company right now, you don't have it in, it's just like part of your, it's like having a website back in the 90s, right? Like you just have it. But what type of like, what are some of the trends that you see in that aspect? Like what should we be looking out
for? In terms of AI, right? AI and fintech, right?
Yeah, AI, fintech, but you also just mentioned some synergies with AI and blockchain technology. Yes. Let's explore that.
All right.
What do you see happening there?
So let me take it layer by layer. So I would give you what the AI use cases are, and then I'll tell you where blockchain comes in heavily in that aspect, right?
Okay.
So of course, AI has been used in financial technology for years, right? Of course, GPT-4 mechanisms brought in GPT-3, 3.5, and 4 mechanisms took AI to make it more popular and it made it more attractive and brought in some sort of noise around AI, which has been calling that for which we've been waiting for years. But AI being applied in financial technology, especially when it comes to things like trade index, credit simulation, quantitative analysis, and things like that. AI has been used. Machine learning algorithms have been proving Wall Street for years, right? So in the last 2 years, right, how AI is perceived has also improved, and the technology behind AI has changed a lot and is more massive, right? And we're even going to a state where quantum data could be interpreted very easily in a few seconds, right? So you have a situation where things like credit. Let me give you an example, right? Let me use the US as an example. It's a similar case here in the UK also, but it's way, way, way more horrible in the US, right? The current credit system that is being used, the current credit scoring system, right? What you guys do with FICO and stuff like that, right? Is over 72 years old. It was, I think, 1956, right? The model has not changed. The model has been the same, right? Just minor changes, right? And till today, a lot of people in the US, right, do not they understand how the credit rating occurs, but because the data behind that credit rating is very, very rudimentary and old style data and old style data analytic type tools being used, right? And of course, I don't need to tell you what the US was like in the system, built with a lot of biases and intricacies, right? The credit scoring system is not favorable. So even so, I had a friend who recently moved to the UK from the US, right? He was like, he never understood his FICO score like all 3 years he has been there, but came to the UK, he understood it because he was doing things that supposedly should make his credit rating improve, right? But it just never did, right? Because there was a lot of bias already intricated into the data that does not carry real-time analysis. AI is going to disrupt our industry. There are a lot of fintechs and even a lot of banks in creating independent credit rating systems, right? That is being fed a lot of machine learning algorithms, right? A lot of new style data. So things like, yes, the traditional data forms the basis of the algorithms, but the algorithms are trained to understand based on, first of all, simple time series data, right? How has this particular type of individual, this particular type of characteristic, handle data on an average in the past, right? And train the data, use that information to improve the credit scoring system being used to analyze particular individuals, right? That is where AI is going to have its best implementation, I think, in 2024, right? A lot of this is being built rudimentary, right? From is basically rewriting the credit rating system. We've seen this happening in the UAE, right? Building whole new systems, right, around this particular type of aspects, right? So, and hopefully, maybe 30 years from now, the US will adapt, right? By the way, I'm not criticizing the US, but when it comes to financial technology, right, the US is more of the retail financial technology. The US adapts later than most developed countries do, right? There are systems that people have been using in the UK for 15 years. For example, in the UK, I never hold my card or cash. I don't have to.
On your phone.
With my phone and my smartwatch, even I don't even need to bring out my phone, right? The US started adopting such systems. I had Cash App implementing NFC, Venmo implementing NFC technology. These are all recent, right? But people have been doing this for 20 years over here.
So a few things, right, based on what you said with the credit score. So a few episodes ago in November 3rd, we had a gentleman from South Africa, John Jacobson, CEO of Altiminst. And what they do is they have the credit tied to their shopping history. So people who are unbanked, no credit, one of the things, and this goes along with what you said, one of the things that they do is they'll look at your, like when you go to the supermarket, you'll have some sort of rewards program. And then based on your spending history and what you spend, how often you do it, the bank will get that data and then you'll start seeing offers for the bank to extend you some credit. You come in, and then they start you on some sort of loan if you need it, right? Because you'll get the ads for the loan, and then they're basically using your shopping patterns for credit. So it's outside of FICO, or well, obviously they don't have that because it's not that's more on the US side. But it's just going to your point in terms of a trend
Outside the
that we see
traditional systems.
outside of the traditional, because we had it, and I found it fascinating, right? Because even here we use all of the rewards points and stuff, and it's tied to different manufacturers. They give you certain deals, right? Because that's
Exactly.
their way of advertising in that ecosystem. So interesting point. I just wanted to bring that up, please.
Yeah, 100%, right? The loyalty program system is a bit more advanced than the credit system, especially in terms of using AI and ML, right? Especially when it comes to using reinforcement learning algorithms, right? So we're going to see a part where a lot of the what is being used in that industry is going to be adapted into the credit industry and credit rating industry, right? And both for individuals and businesses, and things like how you shop, how you spend, how you what percentage of your income goes into a certain type of activity and things like that, right? And being trained on that, and you having based on, let me give you an example, right? Somebody that spends 20% of his income on rent in London compared to somebody that spends and ends the same thing with somebody in let's say, a rural part of the UK, right? And spends 20% of his income in rent, and the person that lives in the rural part of the UK that spends 10% of their income in rent shouldn't be judged the same way, right? Because there is more incentives to save more in a rural part than in London, where things are slightly more expensive. So you're bringing in the price and data and cost of living data, right, into how you're saying, hey, this is how much he has to disposable to invest, and this is how much he has, this is how more likely he is to pay back credit and loan. Now, the person in London might have more long-term earning capacity than the person living in a rural area in the UK, and the existing systems might not take that into account, right? And take just that base data, right, of short-term earnings and use it, right? But if you are also training historical data to see how people have adapted in the past, you find out that, hey, that person might actually, in London, might actually have a long-term chance of a better long-term chance of paying their loans and paying satisfying their credits, right? Even though it's currently not the situation right now, right? So things like even industry type, down to like things like how you earn, what you do, how good you are in at your job, right? How you spend, like basically all this data needs to be trained and adapted historically and compared across board. The original credit rating agencies didn't do a comparative analysis. It was more of a single analysis. So it's a situation where the financial industry had to adapt to a certain situation they were given, rather than the credit industry, the rating industry adapting to the financial environment. So AI is going to change that, and human capacity cannot keep up with that amount of information. But with AI, you find out that a lot of financial technological tools are being synergized, right? So I do a lot of things and a lot of data. In the UK, you have what they call the open banking network. The amount of data that goes into the OBN is crazy, right? So imagine all this data being trained on AI, right, and then being taken, and credit decisions are being made based on that, right? And even things like in terms of like how you allocate your resources, right? Now, these on a business point of view, right? How you allocate your resources. So look at a traditional fintech, for instance, right? They have to spend over $2 million in treasury management, right? Because they have to hire some professionals to do treasury management, and another 4 million on paying accountants, and 3 million paying lawyers, right? A lot, apart from the lawyers, right? A lot of what those people are doing are being automated, right? And that's where I'm going to bring blockchain in, by the way. A lot of what those people are doing are automated in terms of how treasury is managed, in terms of how we are going to allocate. Hey, this part of our liabilities is being sent to satisfy customer withdrawal request. this aspect of our money is being moved into treasuries, government treasuries. This aspect of our money, basically portfolio allocation, but not exactly portfolio allocation, right? Just basically how is managing, hey, should we hold euros more than US dollars at this point, or should we hold US dollars more than euros? But our US dollar exposure is more than euros. Why should we hold US dollars more than? These are things where you spend money on very expensive analysts that would not be as efficient as an AI algorithm basically making those decisions. So treasury management is going AI is going to take it over. We're doing something similar in Altiminst, right? And um, I'm taking the lead in that, right? Whereby the treasury is being completely automated, right? And going to be made public, and all the accounting records and everything is going to be made public via the blockchain, right? And put life on the side. So you would have a situation where a neobank, right, actually has all these accounting records updated live, right? So with AI, these things are possible because you can automate the systems and make decisions and remove human element of the decision, remove the human weaknesses in the decisions that have led us to a lot of the financial crisis we've had over time, right? Most especially 2728, right? Because 2728, all the data was saying that, hey, let's not do this. But human beings and human bias make people set up. So it's more or less I set up a model based on my bias and then force the data to meet the bias. But when you have AI and machine learning algorithms, these are very, very unbiased. So when it comes to things like treasury allocation, portfolio structuring, and making simple economic decisions, AI is going to play a bigger aspect. Yes, I'm not eliminating the human aspect from that, right? But AI is going to play a big part in making decisions because, like I said, it has more data than what the human mind can comprehend, right? So data has been the new oil all along, right? With AI, data has not just become the new oil; it has become the new everything, right? Like even something greater than oil. Yeah, go on.
Only thing to say, right, with that is, and I was over at the Money 2020 conference a few months ago, and I had a really good discussion with the beast. We're going back and forth. And the one thing about everyone talks about AI, and obviously it relies on data, but we do have to understand garbage in, garbage out. You really have to qualify the data that you're actually analyzing.
Exactly.
Because if you don't, I mean, you're going to have a model doing really great analytics on data that's not relevant, or and I think that is something we're going to see. This is something that just outside looking in. I just think in the rush to bring a lot of products to fruition, we're going to see data that they're not producing the results that we think it should. And I think we're gonna have to find some way to qualify that data because it's gonna look great on the surface, but it could be wrong
That is where the
depending on how
blockchain
you
comes
source
in.
that data. Okay,
That
talk
is
to me about
that is exactly where the blockchain comes in. Right. What you just said, right? AI depends on data, right? And data quality is a problem in a lot of places, right? In a lot of institutions, more or less in financial technology, but it also exists as an element in financial technology, right? You have a situation whereby a lot of people tilt data. I could have the same set of numbers, but I could basically model it in a way to suit my bias, right? And then feed it to AI algorithms, and AI algorithms will basically do what they call confirmation bias, right? And feed to you what you expected to see, right? So basically, we're going into a world where AI is not just being fed data; AI is also collecting data.
okay.
You understand? That's the whole point of training models based on machine learning to know how to identify and process data quality is one industry that I wouldn't call it a 2024 trend, but I'll call it a trend that's going to happen in the next 10 or 15 years, right? I
Oh wow.
personally know somebody that is working on on sort of like a project that is doing a lot of research on that particular aspect, right? He was doing it before in an academic environment, but he couldn't achieve the scope he was doing. So what he's now privately funded and doing a lot in that particular aspect, right? And hopefully you will get him on the show if you want. There is a this can
Oh,
be discussed for 4 hours, right? So it's a whole topic I think you should explore for like a whole show,
oh,
right?
definitely behind the scenes. Let's send me a referral email, and I think that'll be an interesting topic. But can you just summarize for me and for the audience, because some people may have missed that? How would the blockchain play into that? Like,
Good.
what do you see happening in that
The
route.
blockchain, right, ensures data immutability, right? Let me ask a question, right? If you bring the data from the banks, right, in terms of like how people trade and bought and sold particular financial assets, right? Let's say from investment banks, right? And you bring data from the Bitcoin blockchain, right? Which one do you think will be more authentic?
If we look at it from if we bring data from, I would say the blockchain will be more authentic based on your
Exactly.
example.
Exactly, because when it happens, right, data is collected in real time. Basically, the data collection aspect of it is also the execution aspect. You understand when it comes to the blockchain. So basically, execution happens on a data collection mechanism, which is the blockchain, right? Data is immutable, it cannot be changed, right? The
Yeah.
consensus for data to be changed is very difficult to achieve. So data remains like that. Even when forks of the Bitcoin blockchain happens, you have situations whereby the original chain always stays valid and data is still being implemented in the original chain and transactions are still occurring and different activities are still occurring. With the blockchain taking, when we now start applying things like credit and lending, now I'm not talking about what we have in today as DeFi, right? Which is basically pushing in tokens in and out of an ecosystem. When real life credit and lending and other financial activities, including payments, including tokenization, including asset allocation, are going on the blockchain, and you now have a bit of data immutability and smart contracts executing to show that this and this is happening, and you have all this data happening on the blockchain, you have improved data quality in that particular aspect because changes in the data is going to be harder to occur because it is on the blockchain. So basically, you have data immutability, you have better data quality, and you have data being structured in a more proper way and in a more readable way, right? And in a more interpretable way, right? And even off-chain activities these days, right? And which is another trend which you've probably heard about zero knowledge technology as one of the latest trends in the blockchain world, right? And one of the things about ZK tools is that it helps us bring off-chain technology on chain in a very easy way and in a very blockchain computable mechanism. So what could have taken, let's say, 500 gigabyte of data would end up taking just 5 kilobytes on the blockchain and things like that. So then you have things like Chainlink that helps bring off-chain data, but they bring off-chain data in its raw form into the blockchain. What ZK does is it converts it into byte relatable data and then just summarizes it to zeros and ones on the blockchain and basically makes that data simple to compute, right? And you then train AI to like actually harness this data and make decisions based on this data, right? You then hear that, hey, the person with this private key that took this particular loan that has been doing this particular activity that has been spending money, which is also being recorded on chain, right? And been doing this and has executed smart contract A, right, to do and has fulfilled his obligation for smart contract B, right, is more likely to pay back that loan than let's say the person with this particular public key and things like that, right? Although it would not be reading it as human beings, it would be reading as, hey, this is activities of this public key. This public key is more credit worthy than this particular human being. You have an improved data quality and an unbiased data quality. Would it be perfect? No. That is where machine learning comes into it, right? It will keep training and improving it. But the thing is that this particular systems, even in its simplest forms, is 100 times more efficient than your most advanced credit ranking system or advanced um, lending system that exists in traditional finance, right? So that is one way we're going, and it's good to see that a lot of traditional financial institutions are also beginning to tour this path and understand this. Yeah, in that aspect.
You know, this conversation, in terms of trends, we talked a lot about AI and blockchain. I want to start kind of shifting. What other trends do you see?
In the fintech world, right?
Yes.
Still related to blockchain a bit, right? But because most of the applications are also going to be on the blockchain, but you have a lot of applications outside the blockchain, right? In terms of asset fractionalization, right? is becoming very more popular, right? We've got a lot of fintech working on this particular aspect, whereby by asset fractionalization I mean, hey, you take um this particular asset, let's say this ounce of gold, for instance, or let's say real estate, or let's say diamonds or something, right? Or just it could even be credit instruments. It could be um, investment instruments that are otherwise very, very expensive. That could be 100K a piece, being fractionalized and being sold to retail investors, right? So you have a world whereby a lot of fintech is being built to allow retail investors have the same type of exposures that bigger type of investors are having, and you're seeing a lot of funds implementing these tools and a lot of these fractionalized assets and selling and packaging it and selling to retail investors. A lot of fintech apps are making retail investors able to partake in this particular aspect, and in that particular aspect more, right? Um, in terms of new banking, right, and fintech, right, we're going to see a lot of improvements in terms of that, because regulation has changed a lot of things. By the way, we're going to see more regulated activity, right? And one of the things about more regulated activities is that people are going to adapt to more regulated activity, right? And the technology is going to be built to actually identify how to comply with regulations in a more notable way, right? Already, banks like Monzo, fintechs like Monzo, Revolut, and a lot of people, they use AI heavily in compliance and um, fin crime detection, basically, right? And they use a lot of AI tools to do that, right? Before human beings come and do the final assessment. We are seeing a lot of human assessment being reduced, especially with Revolut and how they're building their systems, right? And basically focusing more on AI systems detection and on fin crime compliance, right? And even outside AI, we're going to see a lot of more complex compliance and financial tools. With the laws that the FCA is coming out with in the UK and the SEC is coming out with, and banking regulators are coming out with in the US, right? We're seeing regulators for the first time, right, actually write regulations to adapt to complex environments. So we are going to see a lot of fintechs trying to comply, right? We are going to see a lot of new fintechs proper, but have this particular base compliance methodologies in mind. We're going to have a lot of companies come out to serve these particular purposes and things like that, in sort of like some sort of compliance intelligence, basically, right?
So based on that and a summary with heightened regulation, more regulatory standards being created to comply with some of the more complex technology transactions, we're going to see probably a surge in reg tech, as well to probably start, meeting that gap. Another thing, one of the other trends that you mentioned, after the blockchain was asset fractionalization and fintechs, creating technologies to fractionalize, more highly probably cost prohibitive investments to the average investor. So seeing how to basically break those into shares that people could consume. And I've seen that use case before. I don't want to misquote, but I know I felt like Robinhood did something like that. Um, and I can see other fintechs, like you said, building technologies to support that.
Robinhood is mostly stocks, by the way, just stocks and bonds, not actual. It was more of a focus area. Now we're gonna see it go beyond stocks and just normal securities and things like that. Yeah.
Interesting. Yeah, I mean, yeah, they were basically on stocks and bonds, but the concept's similar. But now you're saying, okay, what about like real estate? What about things like gold? I'm
Even
always
trucks.
interested. Even what?
Even trucks. Yeah.
Oh,
Truck
interesting.
ownership and just different types of hard assets, industrial equipment, financing, and things like that. Exposures to
Mm.
things like that are going to be fractionalized and make retail investors have exposures to these things, right? Anything that could be on the asset side of the balance sheet, right, that is being used to do business and generate income could be fractionalized and sold to the public. And with fractionalization, diversification becomes easier, and portfolio optimization becomes easier, and risk mitigation becomes even better in that aspect in terms of investment exposures and things like that. Yeah.
before you add a second one, I want to add a trend: the emergence of green finance.
Oh yeah.
You know, well, it's interesting because it's things that I was exposed to on Money 2020, a company called Kogo that does that, and we're going to be interviewing the CEO. Probably, I think he's scheduled for later this month or early next month. But that concept, right? How and it goes back to what you said earlier. Now we start looking at banking transactions of what someone is spending on, and we start seeing it. Okay, your consumption of gas, your consumption of when you grocery shop, eating meat, how is that? All of those things kind of combined. Maybe if you ate less beef and did more vegetables, it then impacts more so on a green level. So it was interesting. Can you what are your thoughts on that trend?
Oh yeah, yeah. Certainly something that is going to take more effect, right? Because the sensitization towards more green effective types of, let's say, more efficient and more sustainable means of development in other industries is being emphasized. So finance is not going to be left around and left out, and financial technology is not going to be left out. Definitely, it's not something I'll say I've given a lot of thoughts to, by the way, but certainly it's something that is okay. Let me use how the average entrepreneur is thinking right now, right? In a capitalist system, right? Something is done right, not because you want to do it right, but because I'll make more money doing things the right way, right? For me to do things the right way, there needs to be an incentive for me to do things the right way, right? Now, I build my fintech app, right? And I don't care about green finance. I don't care about carbon strategies. I don't care about carbon CO2 emission mitigation strategies, right? I'm going to get less investors from traditional institutions, because traditional institutions want to say that, hey, I invested in this and this is more energy sustainable, and it makes me get more grants from investors that are more concerned about these things, right? So yes, if not for anything, for that particular incentive, right, I'm going to do more green. So I'm gonna have a bigger focus towards green finance, right? And in terms of personally, I think one of the reasons in Nigeria, for instance, right, I generated my own electricity, and that was because I used solar panels both in my home and my office, right? I used solar panels, and in the long term, I spent less than somebody that was using dirtier forms of energy, that was using fuel generators, right? And the government's own source of electricity, which was not efficient. So people use fuel generators to generate their own electricity. In the short term, it looks cheaper, right? But over the space of 3 years, I spent 70% less than they did. It's just that it was capital intensive to get those solar panels. And there are startups going on in Nigeria that makes financing of this, like spreading your finance cost for solar and alternative forms of energy cheaper, right? And they are basically creating a whole financial model around it, right? Where they can have like some sort of like control over the technology you're using to generate this electricity. And if you do not pay, they turn it off. It's as easy as that, right? But you still own the solar panels being used, and you still own, but it's been how they achieve that, I do not know. That's not my expertise, right? But it's been achieved. But in terms of their financial exposures, in terms of asset to liability relationships, their books are looking better than a lot of traditional financial institutions, right? In terms of exposures, right? So yes, with those trends, and this is becoming very big in Nigeria, by the way, especially by young folks, young entrepreneurs, young tech folks like myself. People prefer to generate their own electricity, right? And it's cheaper, right? So in terms of that aspect, building a whole financial industry around sustainable energy and sustainable tools is definitely going to going to take, if not for any reasons, right? The entrepreneurs have a lot of incentives to do that. People have more incentive to use it, and as long as incentives create, right? Because sincerely, green finance and its solutions in and of itself is not a profitable venture without those incentives being achieved, right? Unless some sort of energy optimization is achieved, right? Whereby I only need one solar panel to generate 2,000 megawatts of electricity. Till that happens, right? It's not going to be cheap to do. So yes, it has to really take shape in that form. Yeah.
What other trend do you have?
Okay, I talked about fractionalization. Of course, one of the coolest parts currently where AI is being used a lot, right? And the finance industry is not an exception. Is and fintech is being built around is in terms of how you satisfy customers, customer service, and chatbots, right? Um, I've always believed that chatbots has a very big limitation, right? Most of the time when I get to customer service chatbots, the first thing I request for, please, I need to talk to a human.
Oh my gosh, same thing here. I hate
Yeah,
that. When I call, I'm like, look, I'm just hitting like where we're in the US, I'm just hitting 0 or 9. Like
yeah.
I want to talk to a human. So yeah, that's like one of my pet peeves. Like if I'd rather answer it myself or just talk to a human or figure it out myself. But yes, I'm 100%.
Exactly. Because whatever the chatbot is telling me, I can find on your website or on my account, right? Which doesn't make sense, right? So, but more complex AI algorithms is being built in customer identification and customer satisfaction, right? One of the new banks here in the UK tested the system, right? Was it Wise? I think it was Wise. It was like a whole system, right, where they compared in this new type of algorithm that they're still building, right, and it had a lot of machine learning aspects to it also, and they compared the performance with a human server, right, and the AI algorithm actually outperformed the human server. So in terms of fintech, that is one customer service is one aspect that is being worked on a lot, right? In terms of optimizing how AI can be better efficient, where I don't need to say, hey, I need a human, but AI should be trained to understand, right? And where cases and where cases are needed, but more basically more AI human synergy, where you basically need less human and give a lot of the tax to AI and save a lot of money on that part, right? So in that particular aspect, right, we're gonna see a lot of that trend in the financial industry, right? In terms of in, in terms of how syndicated lending occurs, right? The average syndicated lending takes three to four minimum. So it can take years, but minimum, let's say 3 to 4 months, right? A lot of tools and financial technology are being built that's going to take syndicated lending and take it from 4 months to 2 to 3 days, right? Because go on.
For those that don't understand, can you go over what syndicated lending is?
To summarize, to cut out all the complex stuff about it, right? To summarize, is just, hey, you want to give a loan to, let's say, person ABC, right? Instead of raising this loan from, let's say, one bank or just one institution, right? If you raise this particular loan, let's say $1 billion, for instance, you raise this particular loan from 30 to 50 different institutions, right? Usually, that is usually a paperwork headache because most of us different institutions have different standards and different things they want to know, different project managers, different credit analysts, different styles of how to give lending. So syndicated lending usually help in how it usually operates, right? And in this case, you're going to have a situation whereby with technology and with the blockchain in this particular case, right? A lot of all the information that usually takes a lot of time is going to be harnessed, right, and create sort of like a syndicated line of credit, right, whereby you have what people usually call credit associations, mean having no need to join a credit association. You have your standard, you have give me the algorithm behind your standard. I input it, right, and you now have you now have AI train itself on like different standards and give you a unified standard algorithm for a particular borrower to meet in that particular scenario, right? So yeah.
No, that sounds interesting. So what you see more of a trend in syndicated in lending moving forward?
Oh, sorry, come again? I didn't hear that.
You see that trend in 2024 for more cases of syndicated lending?
Oh yeah, definitely in that
Okay,
aspect.
interesting. Interesting.
Even things like customer authentication, right? Security tools, right? Customer authentication and all those, right? There are a lot of new tools being built in that particular aspect, right? Especially using AI, right? And that is something that is going to be changing a lot. Like when I say a lot, it's going to be changing heavily in terms of how AI is used in fintechs and things like that.
One of the last, I mean, you can. I'm gonna say one last one, and you can
Right.
jump in with another one. More open banking APIs enabling third party access. So, we see what reference companies like Plaid does. In terms of, and you mentioned identity verification platform like Trulio. So it's looking at more API usage just to continue. I mean, it's been going on prior to 2024, obviously, but continue growth in that area. I mean, over in UK, open banking is a huge thing, so that the leveraging of APIs. And from my standpoint, just looking at it from a security standpoint, that's my foundation is more so like, okay, how do we even increase security in API transactions and different things of that nature? I mean, so that's what I see.
Oh yeah, and this is a growing trend, right? That has been happening for years and would even happen more in 2024, right? When it comes to the open banking, right? And sincerely, right? You have a situation whereby a lot of fintechs are building solutions around. Let me use the UK for example. The UK has one of the vastest open banking networks in existence, right? And the data and the applicability of the open banking network goes beyond payments and unified transaction. It goes to a lot of things like lending and borrowing. It goes to a lot of things like, so you see that it's linked to a lot of what we're talking about. So are you a new fintech that wants to do something new, right? Once I have the authorization to plug into the open banking network, right, I can get a lot of information and do a lot of executables for a lot of basic stuff that I want to do that I don't have to build from scratch and things like that. So yeah, it's something that is a trend that has been in place. It's going to continue being in place. It's going to streamline finance in a very heavy way, and it's being applied to things beyond banking. It's going to be applied to insurance. It's going to be applied to, you have insurance activities data being fed into the OBN, and you have things like even things like car financing, bicycle financing, and a lot of things like that, right? Go data like that being done via OBN. I remember trying to buy a bike, right? And basically it was data from the OBN that was fed to say, hey, okay, this is how you can have a proper payment plan for this particular bike and things like that. And even in terms of the pricing and things like that, they were like, usually during the winter, right, bikes are usually cheaper, right? So there was this particular fintech that was able to set up an algorithm that, hey, there's a credit system that if you want to pay once, right, and pay during the winter and have this particular supply for against the offset against the winter supply, it could be cheaper because the money is leaving your account in the winter when the demand for bikes are lower and it's cheaper. But I'm buying I'm buying the bike in the summer, I'm getting it delivered in the summer, right? But I now have to use like a generic bike that, yes, this same particular brand is going to be delivered in the winter also, right? And I get it delivered in the summer, but offset against winter inventory, right? And it was a fintech that like streamlined this particular data via and had and access your credit via the OBN and get stuff like that.
That's really interesting. So that's like, years ago was the buy now, pay later trend. This is something totally different. I haven't heard of this one yet.
It's an inventory management solution, basically.
Huh. That's interesting. So, all right, because this is my first time here, so I want to understand and also the audience. So, you're trying to buy the bike, but it's telling you, okay, if you were to wait in this period when the demand is less, it can reduce your cost.
Exactly.
Huh. I'm sorry, please.
So basically, right, the bike company has inventory, right? Now, one of the headaches companies have is actually managing and keeping inventory is a very, very high cost for them, right? Now, there is a higher demand for bikes in the summer, right, than there is in the winter, right? Now, the company that is selling those bikes, right, has its inventory coming, like it has its bikes coming more in the summer, right? And so the price of this bike in the summer could be, let's say, 700 pounds, for instance, right? I get this bike delivered to me in the summer, right? I'm just telling you how the back end works. In the front end is simple, right? It's usually very simple. I get lower pricing because you're using this inventory management fintech, right? So this bike is supposed to be delivered in the summer. So theoretically, I'm getting this bike in the summer, right? And selling it and exchanging it. I'm buying the bike in the winter to pay back the loan. Like you're lending me the bike, I'm buying the bike in the winter and paying you back the bike. But not actual, that's a theoretical inventory, how it works, but not actual bike. The fintech has made it in such a way that I don't actually have to practically buy a bike and then return the bike to them, right? Of course, with small rates, which is still the interest rates are still low, way lower than the price difference of that bike between the summer and the winter. I'm buying this XZBX 800, which will be cheaper in the winter, right? And also because it's more in vogue, then it will be cheaper, and replacing your inventory of the BX 500 that would have also been sitting in your inventory during the winter.
What do they call that? Like, you know how like with fintechs like Klarna, they call it buy now, pay later. What's that called in terms of, because once you have one fintech doing it, there's going to be like, if it works out well, there'll be like 3 or 4 others. What's that feel?
It's just one company that I know. In fact, I was one of the beta testers that was able to do this, right? So they don't have a models, but just thinking of it, like it's just like deliver now, pay later. Right, but there is no any actual model, right? The only difference is that in normal BNPL, right, is you're buying now and paying later because of the credits, but it's like I am lending a bike, I'm paying you back in a bike, I'm not paying you back in cash.
Okay.
But it is not me that pays you back the bike. It is the fintech company that pays you back the bike. And because the fintech company is buying the bike in the winter, I am buying the bike from the fintech company at winter pricing.
So, but do you still have the bike for the summertime?
It's mine. So that's the thing. The fintech streamlines it in such a way that I always have the bike.
Interesting. I have to like look that up, because I find that's different. And that could be a whole like a trend I can see being started. Thanks for that. A lot of questions, but we are coming up on time. Let me do a quick message from our sponsors, and then we'll circle right back. Quick message from our sponsor.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on Demand CISO to connect with an expert.
Just like that, we are back. Always love talking with you, man. It's like always is a great conversation, learning new things. leave fascinated sometimes even with more questions that I have to look up. So I always appreciate you hopping on and giving your insight. Definitely want to circle back with you on. I know today we did cover blockchain related topics, but we also talked about other trends in 2024. I know this year I definitely want to dive into a blockchain crypto related show and just discuss some technology. So, I'll keep you updated with that, and we'll circle back and schedule something, because I love your insight, and I even more than your insight, to be honest with you, I love your passion about it, man. Because it's interesting, because I have colleagues and friends that are like anti crypto, totally, and they give me a lot of, oh, you have a crypto show again, and it's a whole big thing. But some of them don't. I mean, some don't even want to talk about crypto or blockchain. Some are like, okay, I respect the technology of the blockchain, but crypto, I don't want to even think about. So, I love having you on because of your passion about it, and just drilling in. And I'm unbiased, man. I mean, it's another piece of technology. We can leverage it, or if it can make money, I'm not particularly anti or 100% for. I'm just in the middle. It's all to me. It's all good. It's technology, so let's just understand it. But I just love having you on to really talk about it, and I love your passion. I think I want to do a show in the future where I have someone who's just so anti crypto and blockchain. I have you, and I would love. I just love. I just want to be a referee.
I love that. Would be the show of the lifetime, man. I would love that.
Okay.
Get that done as soon as possible, man. Because I
want to organize something like that because of your passion, and I want someone who's equally passionate against it.
I debated a lot in my uni days, so I love that, man. It was like my favorite type of event, like actually having actual debates and things like that. So yeah, it's something that would be lovely. Yeah.
I'll talk to my team and want to make something like that happen. In any event, I want to give you some time to talk about, to the audience, what you're doing, anything that you want to promote. I know you're consulting, so I'm going to give you the stage to do that and how people can find you.
Okay, I think of all the consulting work I'm doing, I think Altiminst is one I'm really interested in. Is one I wouldn't say I'm coming in as a co-founder, right? But is one I feel like a co-founder of, and I'm putting in a lot of passion in. So basically, what we're building is an overarching financial ecosystem that's a mixture of neobank accredited institution that is being built with on the internet computer with tools from the internet computer, right? That is a whole lot of discussion to go to and why it is useful. But basically, it's in the authentication mechanisms being created by the internet computer, like we talked about in the trends. Customer authentication. So there's a whole security layer being done on the internet computer and in the blockchain tools being utilized, and creating a Web3 identity that you can use across payments, lending, borrowing, car transactions, loyalty / rewards, like a whole ecosystem. And it's being built off a piloting phase from the Battersea Power Station in the UK, and gradually we'll go from there. We already have a lot of merchants that are interested in what we're doing, and a lot of residents and basically stakeholders within the Battersea Power Station that are currently interested in what we're doing, and will likely be part of the pilot phase of what Altiminst is doing. So yeah, that's just a bit of a background into what I'm doing currently, and of course you could always reach me. Preferably LinkedIn. I think LinkedIn is a social media I'm more active than any other part. Just search my name, Chiagozie Iwu. I don't think there are two people with that name in the world, right? I've searched, believe me, right? So I would always be on LinkedIn. You can contact me on LinkedIn. You can contact me. You could get my mail from there, and you could reach out anytime, anytime. I'm always willing to hear discussions and how we can take the fintech world forward, and even for potential collaborations. A lot of startup experience here, so yeah, I've been there, done that. So always willing to lend my voice to that. But yeah,
that sounds excellent. If you want, up to you. Put in a private chat the link to Altiminst, and I'll put it as part of the video. If you want to, do you have a link you want to share?
No, there is no active website, so I don't think.
Okay.
Yeah, so maybe with time I won't do that.
All
Let
right,
me just maybe eventually we'll do that.
That's no problem. Yeah, it's like I said, our goal is, when we have guests and they're doing stuff, we want to also promote what you're doing. And as always, I want to thank all the viewers for the show. Oh, do you want me to post that? You just post that.
Yeah, like it's an empty website, right? But that's where the website is going to be, so you can just see that.
Right.
Yeah.
So let me do that right now.
All right.
Now, so it can be part of the show, the video. Oh, let me add it to our link. Why did it say open in a new tab? Right. Okay, let me just put it back here. All right, let me add it so people have the link. All right, so this is a static page right now. They'll have some more info moving forward. So now it's part of the. I always like to do that because now it's always part of the video. Fine. Listen, thank you very much, guys. Next week we're gonna do a trends for 2024 around cybersecurity. That's a show you do not want to miss. Same time, same bat channel, 12 p.m. EST Friday. So that's next week's show. As always, like I said, I'd like to thank everyone for listening in and participating in the show, and for the people that will look on this show in the future in our podcast. Thank you once again. Please stay on Chiagozie. I'm going to wrap up the show and then we'll talk offline.
All right,
guys.
All right. Cheers.
Take care.
Bye, everyone.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.